Welcome, everybody. I'm Ted Earhart. 2020 has been a year full of surprises. That surely is a huge understatement, but I just want to talk about one that in particular has struck me, and that's just the strength in the housing market here in the US. I mean, if we go back to March, right at the onset of the pandemic, I think there were a lot of people, including me, that expected housing prices and the market just broadly to take a big hit as we were sure to experience lots of job losses and so forth. And if we take a look, we actually did see a sharp contraction in home sales. Take a look at this. This is way out here in 2020. This really just is encapsulating kind of March and April. We saw a sharp decline, but followed by this massive resurgence. In fact, we're back up to the levels that we previously saw kind of leading up to the financial crisis in 2008. Just there's tons of real estate transactions occurring, which has been a major shock. That's been coupled with rising home prices. I guess probably not all that surprising. In fact, nationwide, home prices are up nearly 10%. And the median home sale price for existing homes is now, I'm sure it's at a nominal high of, in excess of 316,000. I'm not sure if that's a high on an inflation adjusted basis. It may be, but it's definitely, housing prices are certainly up there. Now, the question really is why? Why have we seen this just explosion in people moving around and home prices? And there's no question that one of the major, probably the number one factor is mortgage rates. We've just seen an absolute collapse in mortgage rates, really a trend that was actually started before the pandemic struck. If we go all the way back here to late 2018, you might remember at that point in time, there was a lot of talk about recession. There were a number of key economic indicators that suggested a recession was really just around the corner. The stock market went down 20% in the fourth quarter of 2018, and the Federal Reserve started cutting rates way back then. But then we get up here, of course, in the Q1 of 2020, the pandemic hit, and the Fed basically put rates, their effective rate, which they control, down to zero, and everything else has followed, including mortgage rates, which are now at all-time lows. As you can see, according to Freddie Mac, conventional loans are down to 2.72% on a new purchase. Another major trend that has been pushing home prices up is simply just the lack of housing available on the market. This is a chart put out by the Federal Reserve, and they track housing supply. And I won't get into all the wonky details, but basically there just isn't much to pick from. In fact, I read most recently that the available homes for sale, the so-called supply is at a 40-year low. So again, you just get back to, Econ 101, when you get an imbalance between supply and demand, that has a major influence on prices. And right now, demand far outstrips supply. So we've had that's been a huge tailwind and a major force in pushing up the price of housing throughout the United States. The other factor that's worth mentioning, and this is contributing to the low supply, is just the lack of new home construction. If you go back to 2005, 2006, that's kind of when home construction peaked in the US, and you can see that on this chart. Well, we had the housing bust, of course, and I read recently that top to bottom, construction in the US went down like 80%. And it's been a very, very slow and gradual recovery in the amount of new homes being built every year. And that brings me to this chart. Basically, here's all you need to really understand with this is anytime this orange line is below 1, it means that there are more new households, i.e. the population is growing faster than we're building homes in the United States for people to live in. And really, basically, since the housing market busted back here in the 2008 timeframe, we have not been building homes at a rate that even matches population growth. So that has been one of the key drivers in creating this very tight supply of homes available. And again, as we said, that has been a major factor driving home prices. So on the flip side, is there anything that might, get in the way of this continued strength that we've seen in the housing market. And I think the one thing that's actually got a fair amount of attention in recent years is just simply affordability. The National Association of Realtors, they track this pretty closely. And what we're looking at up here is the median home sale price versus median household income in the US. So on the very bottom, I have this ratio. I have this, basically, it's just this orange line divided by the purple line here. You can see this ratio, and it's sitting at an all-time high, at least on this date, within this data set. And it just means relative to people's income, home prices are expensive. And clearly, we're not to a point yet where, no one can afford a home, because as our first slide indicated, lots of homes are being bought and sold so far in 2020. But obviously, if you extrapolate this out, at some point, this is going to be a headwind where, homes are just too expensive for the average family to afford. So this is really definitely more of a medium to long-term issue. If we get back, if we're talking about just 2021, 2022, I personally expect that we're going to continue to see a lot of strength in home prices, in the short run, because of these major factors, the two being low interest rates and tight housing supply. It doesn't appear that there's anything that's going to change that in the near term. So anyway, that's just a quick kind of overview in the housing market. It's really been a big surprise to me, and I think to many market watchers, especially if you were to poll people back in March what they expected would have happened with housing. We've seen a banner year for it, and it looks like that's going to continue. But of course, if there's anything 2020 has demonstrated, is you never know what's going to happen. There's always these unexpected events that can certainly change the direction of a trend at a moment's notice. But anyway, as usual, I appreciate you tuning in, and we'll see you next time.